Hello everyone, welcome to Unit of Technical Analysis. We are going to cover basics over here, and this time we are going to start with a new chapter which is chart patterns basically. Now in chart patterns you can see various types of patterns which are there, but more of they are being divided into two parts. One is continuation pattern and second is reversal pattern, right? There is something called as neutral pattern also, but let's at this time try to focus on these two things, which is continuation and reversal pattern. Now in reversal pattern, now continuation pattern is wherever the chart is there. Let's say this is my trend which has been going on continuation, right? So it's basically like the trend, whatever it is, it keeps on continuing in that part. So that has been more of called as continuation pattern. And a trend reversal is where you know that, okay, fine, for example, if this trend has been continued, has been completed, and after that you get some patterns by which it says that, okay, there's going to be a reversal, right? So we are going to cover at this part basically. We'll start with reversal pattern, and here we'll cover two parts, or rather two chart patterns. One is falling wedge and second is rising wedge. Why I'm starting with this is because continuously yesterday also and today also together we got a rising wedge pattern. So we would like to start with that. Just to cover some of the basic fundamentals part, which is more of into textbook. Let's cover that. See, for example, if you talk with rising wedge, what rising wedge says is generally, okay, let's do one thing. Let's the other directly go to the charts. It will be much more easier, and we'll also take examples. So we'll rather start with something which is already there. I'll just come down to maybe 1 minute chart, and right. Now basically what happened is, here we got a reversal, and from here we were going in uptrend. So if I need to say in terms of an arrow, we can always say that fine. Here onwards, it was more of an uptrend, right? Now what happened is, once we had an uptrend, after that we got a reversal. How this reversal has been there and how we need to identify that with the help of a rising wedge. Let's see that. Now what happens in a rising wedge is, see, I've drawn this yellow line. I'll just remove that. Right. You first of all get 2 points, right? And after that, the trend is right. So what happens is, let's say, for example, these lines are there, right? Now what happens generally is the price, it forms a higher high, higher low, again a higher high, higher low, higher high, higher low, right? But what happens basically is, you find more of like a wedge pattern, right? Where you know that, okay, the price is rather not moving beyond a specific line, right? So this is more of a inclined line that we see, right? Here the price has been moving up, again the price has been moving up, here the price has been moving up, but it has been more of in a linear way, right? It's more of in an angled way, right? So this angle which has been formed, the price is not going beyond that, right? Same way, you have a high, you have a low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, right? So these patterns have been formed, and after that you generally get a breakout, right? So what happens is, with this pattern, right, you come to know that, okay, there's going to be a reversal happening. This is the first part, right? Now first and most important thing is identification of the trend and the reversal, right? So this is the first part where you see that there has been a rising wedge, right? With the rising wedge, what happens is, the price generally breaks out from the range which is there, right? This is the first part, but we don't have to trade on the basis of that, right? Where we trade and how do we trade, again we'll go for Fibonacci, right? Because that is the basic tool that we have been using, and we'll always try to trade on the basis of Fibonacci only, because that is a rule tool that we have been much more comfortable with, and it gives us more of accuracy, right? So once you know that, okay, we have a breakout, after that the price will also always come up, right? So this always happens. We need to consider that, and this is going to be a basic part, right? So what we do is I draw a chart, not a chart basically, but a Fibonacci, right? So there is a high, and after that there is a low, right? And I after that wait for a reversal, right? So after getting this high, you get a low, and after that this reversal has been formed, right? And after the reversal, generally you complete one target, which is either 1.272 or 1.618, right? Now, if the rising wedge is there for a longer time, right, or a shorter time, for example, this has been almost there for, it started from somewhere around 1233 to, it has been going up till 115, right? So time period was approximately around 45 minutes. We'll see that in terms of date range, right? So you see that, okay, this has been somewhere around for 42 minutes, right? So if this is a smaller time frame which is there, right, the reversal is also generally a smaller one, right, as was been shown into the theory part, right? So you find an entry at the bottom, right? This is as per theory. You have a target which is generally take profit at wedge height, stop loss under last swing high. So your last swing high is been your stop loss. You have to take an entry over here, and whatever is your height of your wedge. So for example, if this is your wedge height, this is your target in the downward direction, right? This is what is there as per theory. In terms of practical things, there are different aspects we need to consider that, right? I'll tell you one by one how it has to go across. So let's say, for example, this is a smaller time frame. What we need to do is, first of all, right, you get a range, a reversal. You can first of all trade on the basis of that reversal. After that, it comes back, right? A target has been completed. This is the first part, right? Now, generally, most of the time, if you have a rising wedge, you have a bigger target, right? For example, if you know that, okay, fine, this is your height, probably this is your height. Accordingly, you are going to have our fall also. So falls can be bigger. Sometimes falls are smaller. In fact, smalls at times, falls at times are generally bigger also. And this can be identified with the help of RSI as well as MACD. So let's pop in our RSI and MACD, right? If you see RSI and MACD, right, starting from this line, right, from here till here, right, RSI has been more of in an uptrend, same as been there with MACD. So you generally see that, okay, there won't be much of a fall, right? So this is the first part. If you find a significant divergence, let's say, for example, you are able to identify a bearish divergence, then there can be a significant fall, right? Otherwise, there would be a small fall, not a big one, right? So again, a range is been formed. After that, you get first reversal, then you move your Fibonacci to the next part, right? A range, again a reversal. Once you get a reversal, which is there at either 0.5 or 0.236, from there the market starts moving down, right? So if you see over here, generally your target goes to 1.618. Maybe at time it goes to 2.618, 2 also. So here it has come down to somewhere around level 2, right? And after that, right, you have a price action where it starts moving up. Once you know that, okay, there is a reversal, you can just move out of the trade. That is generally how it is, right? So here if you see, whatever has been the height of the wedge, the same is your target, right? But depends. Generally, we try to take an entry as per Fibonacci at the top part, so you get more points. This is the basic logic that we apply, because we have seen that Fibonacci has been much more successful. I mean, like, we have been able to trade much more easily and successfully on the basis of Fibonacci. right? So this is your first part, and this is first example that we saw for a rising wedge. We'll see one more example which was there yesterday. Yesterday there was a beautiful example, and we got huge amount of points. Talking in terms of trade, let me just tell you. We had already given this rising wedge, right? So this was at 115 that we had getting. No, oh, this was yesterday's. This was not today's. Nifty rising wedge. So this was around 114 that we had given it, and the last point where it was being formed was 140. So we had given exact to the same point, that is 114, when the last one was being formed, because you need to have generally 1, 2, and 3 points. So 3 points were being formed, and you were like, okay, generally from the top it reverses. So for a rising wedge, it may happen that it may just go above the line, and from there it may fall. Most of the time it happens in the same way, that okay, it goes above the previous price, that is first part. It also goes above the line, and from there it breaks out. But that is only a signal. Your confirmation is only on the basis of Fibonacci and price action, right? So this was 114, and this was the last candle from where it just zoomed down, 114, right? So timing wise, we have to be very careful on that part, right? As I told you, this was a smaller one which was there for 42 minutes, and if you see again in terms of time, maybe probably you should be getting it approximately somewhere around for the same time, or maybe much more than that. It becomes insignificant for that part, but maybe you can consider either this one or maybe this one. So falls are generally quick, right? So this was the first example. As I told you, this is for 42 minutes only. Then we had a significant one which was there yesterday. Yesterday this was being given to someone else, and just quickly like to go through that also. So this timing was somewhere around 12:19. So this was July. Yep. So 12:29 was the timing, and it was being formed around 12:20. So either at some point this, the last high part, right? So this is 12:29, which is there, and this was our part which was being given as a rising wedge. Probably this was there, and from there it significantly started coming down, right? So now let's see again in terms of time frame. Started, we're considering high to high. So comparatively, this was for a longer time frame, which is for 2 hours. The last one was only there for 42 minutes, not more than that. So this for a longer time period, right? And if you see in terms of target, probably it was an entire range, then coming to a target of almost 2. Right? So if I consider in terms of Fibonacci, this was a range, the entire day's range. It broke out from there, and again it started coming down. So it is like 1.618 target that we have achieved over there. And then again you got a price action, and then from it started moving up further. Right? So we got a price action, and this was almost at the end of the day. Right? That's how things happen. So even if the rising wedge, we are not considering the height or the depth as it has been given in the theory part, that okay fine, it's take profit at wedge height. So wedge height we are not considering that only, because at times you get more of a bigger rising wedge also, not bigger rising wedge, but the target is much more than that, right? So even if you consider fine, it's so this was your rising wedge. So even if you consider somewhere around moving around at this part also, yep, it gave me price action. Yep, let's try to focus on this, right? So it started from here, the first price action, then the second one, and after that it just moved above that, the previous price, right? And from here it started coming down. Let's also see in terms of RSI and MACD what has been happening, right? Now if you see initially, yes, it gave us a gap up opening that was there, and from there my RSI which was there, it started gradually moving down, so it never went up. Then if you see at the first part, my RSI is down, my MACD is down, right? So first of all, my RSI had started moving down, right? Here also, RSI was still down. Here also, when the price was moving up, right? Still, my RSI as well as MACD, it was also moving down, right? So it was, when you see that there has been a considerable divergence that we are seeing a considerable divergence, then the price generally falls down in, first of all, with much greater speed, and also our targets are huge, right? So it's not that we should be only going as per the rising wedge and its height, that is only one aspect, but we should be combining that with other tools like RSI and MACD, where you will be able to get huge points which are there, right? Let's try to see more examples in terms of price patterns, because these are generally being formed at the end of a bull cycle that we have seen. We'll consider those, or probably consider 2-3 examples. So this is the first example that we are able to see. This is for a time period somewhere around end of November, December, January. So you can consider either this point or this point, doesn't matter, because at the end of the day, it's going to be falling from a specific point, and after that, as per price action, we need to get an entry, right? That is there. So if you see, yes, it started, it went up altogether, and after that, there was a fall which started going down, right? And if you see in terms of, yep, this can be considered this way also. And if you consider that, my time frame would be somewhere around, let's say this is the top, and this was my last high. So this is 73 days. Now, what we have observed is, if the time period is more, generally the fall is also huge, right? For example, if you see over here, this was my rising wedge, and after that there was a huge fall. This is more of a bear cycle that was formed. We'll see one more example where the time period was huge, right? See again over here, you'll be able to find a rising wedge. This is just an extra aspect that we are considering, right? See again, a rising wedge was formed, and with that you get a bearish divergence in RSI as well as in MACD. And after that, the price gives you a price action, and after that it comes down, right? So if I consider in terms of time period, this was again 62 days. So that was 72 days, this was 62 days, and we find a huge fall, right? Let's take one more example, the famous fall of 2008, 2009, the crash rather. Because most of the people giving example of bear crash or a recession, this is the best example that people know about. So people always do talk about that. We'll also take an example in a similar way. So we are almost at 2000. Yes. So this is our famous cycle. We have already seen this or maybe covered this in the previous part, but that was from a different point of view. Here we will be considering this from a different point of view. Right? So this is our phase one. The price was almost moving gradually up. It was been creating higher highs, higher low, higher high, higher lows. But if you check in terms of RSI, we have been getting a bearish divergence. That is, the price has also been moving down. The RSI and MACD both have been moving down. Right? So we see a divergence. And whenever we see that with the price, when there is a rising wedge, plus there is a divergence in terms of RSI and MACD, you see that the price has been moving down drastically. Let's see the third aspect, which is time frame. So time frame has been almost 87 days, right? So again, a huge range was being formed, and after that you got a range and a huge fall, which is generally at 2. So either most of the target is 1.618 or 2. It can be more or less, depends on the price action which is there, right? So these are few of the examples which are there of the rising wedge. So this is our next topic. So we saw rising wedge, how that has been formed and how to have a target for the rising wedge. So this is theory part where it says that, okay, fine, this is how you should be having your target. But we have a different aspect. So that's why I thought, let's try to cover that also. Target can be on the basis of Fibonacci, also on the basis of time period, which is there. If you're playing in intraday or maybe for 2-3 days or maybe for long positions, then you need to see how the price action has been formed and how long the wedge has been formed, right? So we'll be seeing falling wedge. Falling wedge again is the same part. Yes, it's generally the triangle which is there. It has been in an upward direction. Here it has been in a downward direction. So it's more of a fall, and that's why the wedge is being formed in that way. So example is, yes, probably this is the one best example that you'll be finding. Here was a low, this was the second low, and this was the third low, which came together in line. Right? After this was being formed, probably you got a price action, which is there. And after that, there was a huge uptrend. Now, even if I consider this in terms of time frame, this is a long time frame, which is of 114 days. And also the rise which has been there, that has been considerable. Let's see it in terms of Fibonacci. Again, it has been a range, and after that, a target of 1.618. So most of the targets we have been getting nearer to 1.618, just above that or nearer to 211. It depends how it is there. Right? The next example that you are getting. Again, you get it over here in a similar fashion. Right? So here you have been getting a rising wedge. sorry, of falling wedge. Falling wedge, you get two coordinates points, and after that it starts moving up. Again, if you see in terms of RSI MACD, RSI has been gradually moving up, right, over a period of time, and after that it starts pumping up. See, this has been RSI. So RSI at these 2 points, you can see that, okay, fine. It has been considerably come up, right? Right. So it's like more of flat. When the price is coming down, the RSI has been more of flat, and after that it starts moving up in terms of price action. Now, it's not necessary that, let's say, for example, here we had a price action, the target did go up to 2, and after that you had more of price action where the target did go up. And if we check this in terms of the bigger Fibonacci, considering this as the low and after that a reversal, this again you get 1.618 or maybe just above that, right? So that's how it is for the rising wedge. You'll be able to get n number of examples, but the most basic thing about rising wedge and falling wedges, first of all, you should be able to identify how is the rising wedge. So for that, the best thing is wherever you get low points, just draw a line and an extension with that. Let me come down to the minutes part. Right. For example, when you know right, so this point is there, this point is there. So you just keep drawing a line together, and you know that, okay, if the price is just touching that and coming down, probably you need to just get alert. If you are into a long, probably you can start trailing your stop loss. How should be your stop loss for that part? This is my low. After that, this is my low. After that, this is my low. Yes, it starts going up. So probably you should just start trailing your stop loss and also have a look at RSI MACD together. Right? Same would be applicable for falling wedge also. We'll see more examples of the rising wedge. Not more examples, but the same example. Also seeing together with not only the price action, but also the candles which are there. So you see generally there is a huge breakout candle which have been formed. Right. If you see here, there are generally breakout candles that you see. The price drastically starts moving down. So this generally does happen. You need to only keep a look at all these things together. Okay, fine, guys. And our request is to please subscribe to our YouTube channel. Right. And also be on our Telegram channel, which is Unit of Technical Analysis. Right. Thank you so much. Bye. Take care.